Welcome to FX Street. Going to be going over Bitcoin, Ethereum, Ripple, Shiba, Doge, Polkadot, and Cardano this morning, and talking about what they're doing, where they're going, our outlooks for the remainder of the week, or at least until we visit again over them on Friday. But before we do that, we would really encourage you to head on over to YouTube, join our channel by hitting that subscribe button. Follow us on FXS Crypto on Twitter, and you can follow Akash and I individually on Twitter, Akash at Mangyeko, and myself at Just Analysis One. Starting off, we'll be looking at Bitcoin. You look at the price action over the last several weeks, and it's something that I've been kind of mentioning a lot in my writing and in the webinars and the videos, is that the GAN seasonal date of March 21st is one that often reverses markets, especially if they've been trending, up or down. In this case, down. So seeing a pop up and the beginning of a new uptrend is not uncommon. It still has to be verified, but it's not uncommon. So Bitcoin's price action here is not very surprising. The key level that it really needs to get to, it confirmed an ideal bullish Ichimoku breakout, but now it really needs to get the Chiku span above the cloud, and it needs to stay in a buffer zone of at least 5 candles to remain like that. So ideally, what would happen this week is the weekly chart would close around 44,650 or higher. That would be the ideal scenario. But otherwise, Bitcoin did trigger an entry idea we looked at last week at 42K, and that's running active, working nicely. As far as upside potential going into the remainder of the week until we visit on Friday, probably, depending on the momentum, 48K, 47 to 48K might be that upper range. But we'll have to see what happens there. Downside risks, there's still very much a bearish continuation pattern going on. So until it breaks above and out of that, which would also occur around that 44,650 level, that's still something to be concerned about. So downside risks, 37K, upside potential to 47, 48K. We're talking Friday. I'm not sure what you see, Akash. I'll pass it off to you.
Thank you, John. So what I see for Bitcoin is really interesting. It's I'm kind of bearish on Bitcoin for the short term. I'm expecting the price to head down to probably 36K or so. Yeah. So let me just start off from a daily time frame where I see Bitcoin traversing a symmetrical triangle or a pendulum of sorts, and the price has retested the upper trend line for like the 4th time now. Pretty much the levels haven't changed at all. I'm going to flip bullish if we get a weekly close above 52K, and a weekly close below 35K would make me bearish. The symmetrical triangle forecast a bullish outlook could put Bitcoin for 54K, and a bearish outlook could see Bitcoin crash down to 28K. So this is from a long-term perspective. Although the price came very close to breaking above this, I don't think it had a chance, and I don't think it's going to break out anytime soon, right? And this pump here, I'm going to explain it a little later, was a cause of stablecoin inflow, right? But the thing that I want to talk about is from a lower time frame, which is a 4-hour time frame. As you can see here, price created a bearish breaker here, and I think probably since 9th March, I've been looking at this particular setup, and now today it's finally come true, right? And the bearish breaker setup usually contains a higher high and a demand zone present between these swing highs. The price breaches below this demand zone, flipping this demand zone into a breaker, which is why I've marked it as red and purple, pink, whatever you want to call it. It's not purple, yeah. So up to this point, I've marked this as blue because it was a demand zone, but since the price pierced through this demand zone and closed below it, I've changed this color from 3rd March to breaker. So basically this breaker, or the breaker setup forecast that a retest of the breaker often leads to a massive downswing. And as you can see here, the 4-hour candlestick that pierced the breaker got rejected quite a bit, and it feels like we're forming a swing high over here. So where I expect the price to go is to sweep. This is the previous week's Monday's high and lows. At the minimum, I'm expecting the price to sweep Monday's lows, the previous Monday's lows at 37,524, and this is me being optimistic, right? And we've already talked about this daily demand zone here. That this was a major hindrance for bears early on when it was actually formed. But as you can see here, since the first retest, like it has gone through multiple retests and the demand zone is still holding. Multiple retests of demand zone often weakens it. So what I'm expecting is the next dip that we get into the demand zone just pierces through it, shatters it, and goes lower. So for that to happen, I need a daily candlestick close below 36,562. And I believe that's going to happen primarily because A, we haven't swept the previous week's Monday's lows, which is here, and this week's Monday's lows. This is the Monday's low. This week's Monday's low. And this week's Monday's high is here. Right, so the price has already swept the Monday's highs. Yeah, so the price has already swept Monday's highs, this week's highs. The same thing happened last week as well. The price swept Monday's highs and continued going higher. It did not sweep the Monday's lows. So I'm expecting the price to head back down, sweep last week's low, and also fill this fair value gap here that you can see on a 4-hour time frame. The fair value gap here extends from 36.1K to roughly 37K. So that's the target for my setup that I've shown here, where I'm entering the retest of the breaker at 42.8K, and I'm placing my stop loss just above the breaker, and I'm going to take profits at the lower limit of this fair value gap over here, which is 36.1K. So yeah, this is my outlook on Bitcoin from a 4-hour time frame, and I'm actively shorting Bitcoin for the time being. So yeah, that pretty much sums up my analysis for Bitcoin.
Thank you for watching. Please don't forget to like, comment, and subscribe.